Hey everybody, hope everyone's doing well. This is the overview of the Emini 5-minute chart for Tuesday, October 1st, 2024. So with the daily chart, here was yesterday. Turn on the Globex chart. So we had this bull reversal bar on the daily chart yesterday. However, if we look at yesterday, we know that a lot of yesterday was trading range price action. So it's not like the market sold off, kind of like if you remember, it was over here. It's not like the market sold off in the first half of the day and then rallied really strongly into the close. It was more of a much more two-sided day with trading range price actions with a late bear breakout and then a sharp reversal. And that kind of price action resembles expanding triangles. And if you think about this reversal bar, the market is in a tight bull channel, but two legs up, high in a trading range, getting a lot of overlap, and it's nearly an outside bar. So even though the bar looks good, you have to think about the perspective for buying above this bar and the risk reward. So say you buy above yesterday, stop below yesterday, and one times your risk is all the way up near 5,900. And you have to ask yourself if you think there's a 60% chance the market rallies all the way up here before it pulls back, or better yet, before it gets down here. And the reality is that the market is in a trading range here, and it's more likely that there are sellers above yesterday's bar and the high of this tight trading range, and we'll probably get down here. We'll probably test lower. I've been talking about how this rally is losing momentum and it's far above the moving average, and we may get sucked down to the moving average. But with yesterday, with respect to the bar, probably sellers above and probably buyers below the low of the bar. It's a bad stop order sell signal bar. So probably buyers below, scaling in lower. I'm kind of going to do just an overview looking at the entire chart today to save some time. And it's one of my first maybe 20-minute videos. I talked about this. I used to do bar by bar reviews, and that's what a lot of my earlier videos are on this channel. But I'm trying to spend less time doing these reviews so that I have more time to work on my system. And I kind of mentioned that in my last video about the importance of having a trading plan or a system. And I think it's great practice. And, even a couple of videos ago, I also said that I challenge everybody to do some kind of review like this, record yourself and talk about the chart bar by bar, or even just look at it as a whole and just try to make sense of what is happening and what you see and the patterns you see. And as beneficial as I think that is, and that's why I continue to do it, plus I like to help others and to help others develop their ability and to answer questions and all of that sort of thing. However, my system development needs the majority of my focus. So while I'll continue to do these, I do want to spend less time. So rather than spend an hour and a half going bar by bar through the chart, maybe I just take 15 or 20 minutes to talk about the major things about the chart, my thoughts, and this way I have time to actually work on my system. So in the future, when I have things better squared away, I do plan on doing more bar by bar reviews. But again, that will be in the future. So coming into the day with bar 1, we had a huge bear bar. It was about 28 points. And in general, there's about a 20% chance that bar 1 remains the high or the low of the day. But when you take into consideration the context and the sheer size of bar 1 and the strength of the bar, opening near its high, closing near its low, plus it got follow through, there's probably at least a 40% chance that bar 1 remains the high of the day by bar maybe 1 or 2. And of course, as it sells off further, the probability increases. So bear breakout and follow through. And if we look at it with the context of yesterday, I actually wanted to mention one thing about the Globex session because we had a really small gap and we can infer that there was a trading range overnight. But I like to just look because this was a really strong rally and it was possible that all of this was one leg. And maybe look at a 30-minute chart and you can see it's all one leg and we may have to get a second leg. So it wasn't all that clear that this was going to happen today. But remember what I said about the expanding triangle. There are certainly ways to look at it as an expanding triangle, but I wanted to show the overnight session Globex chart because that clears some things up. So here is the close of yesterday. So the overnight session began here, and you can see the market went sideways for a lot of bars. And if you've ever studied Al, you know that he says that once a trading range goes on for 20 or more bars, the breakout direction, the probability for the bulls and the bears is just about equal, 50-50. So as strong as this rally was, and you can even argue overnight, it did get a second leg, broke above the high. So the bulls got their bare minimum, but the problem is we ended up going sideways for a lot of bars. This is the 15-minute chart. And then you can see the first 15-minute bar of the day breaking far below this trading range. Now, it's not ideal for the bears because look to the left, probably buyers below this buy climax. Overall, big up, big down. But when you see a breakout like this, there are traders. Here's the low, the bottom of the trading range. There's bulls buying here, and obviously those traders are getting trapped on this breakout. So we're probably going lower. This will probably get a second leg down. So breakout and follow through, bars 1 and 2. Probably sell the close, sell for any reason. Because the odds are we're going lower. Even if we pull back, bars 1 and 2, breakout and follow through, crossing the EMA, we'll probably get a second leg down, even if it has a deep pullback. And in this case, we had a micro channel all the way down to bar 5 before finally getting a pullback. But think about bar 5. And this is one of the problems with, you could see this as a problem with analysis paralysis, where you're counting legs on the way down. You see here, we sold off, we pulled back, sold off, pulled back, sold off, pulled back again. Maybe it's 2 or 3 legs down. Maybe it's a double bottom, big up, big down. So maybe there's a double bottom here, and you look to buy for a rally back to the top of the range. But the reality is this breakout is strong enough that the first reversal attempt should be minor. The signal bar for buying is bad. Even bar 6 being an outside bull bar, it's a great looking bar, but the context is bad. You're buying after really big sell-off. And it is true that the context for the bears isn't great. As I mentioned, there's probably buyers below here. But I think this is such an obvious magnet, yesterday's low, that we probably have to get there. So the odds that bar 6 remains the low of the day are really low, especially after all this momentum. So the reality is there's probably sellers above 5 scaling in higher, knowing that this micro channel should only have a minor reversal before getting a second leg down. It's kind of similar to the problem with what I was showing on the daily chart too. Even if you buy the close of bar 6 and you go for 1-to-1, there's your entry bar, and maybe you got close to your target, but at this point, what are the odds we're getting up here before down here? It's not all that clear, and certainly not 60%. So with the doji on 7, again, this is probably a minor reversal, probably sellers above if we get up there. This might have been enough of a rally for buyers below. And 7's a bad sell signal bar, so probably buyers below for a second leg up. But this is so tight that we may have to go lower before we find buyers. And then bar 8, trapped any traders buying below 7. Follow through on bar 9, so breakout, follow through 8 and 9. Second leg down, 1, pullback, 2, but this is strong enough for its own second leg. So again, probably sellers above the minor reversal. In this case, it was bar 5. Over here, bar 10, or sellers above bar 9, and you can see that's what we got. We got a test of the breakout point. Any trader who bought below 7 and got trapped, we tested their entry price, and that's exactly where, or almost exactly where, the market turned down for another leg. Then we fell below bar 10, and we got leg 1, pull back, leg 2, pull back, leg 3. Now this is all so tight that even though it's 3 pushes down, it could be a parabolic wedge, a breakout on a higher time frame, and all of this might need its own second leg. So as far as buying above 12 or 13 for a major reversal, we know that for a major reversal, we want to see a trendline break, and we also want to see more buying pressure than we're getting at this point. However, remember what I said about the context on the daily chart. This blue line is yesterday's low. Most bars break out, so we're getting the breakout below yesterday's low, which is expected, but most breakouts fail. So the odds that this breakout succeeds and we fall for some sort of measured move is more unlikely. So probably a minor reversal, even though it's a micro double bottom and 3 pushes down. So we might get a deeper pullback, but I suspect there are probably sellers above bar 11, sellers at the moving average for one more leg down. The odds that 13 remains the low of the day, probably 30% at this point. Then you get a bear bar and it's low, follow through bar, might have to go down for one more leg. We have a sell climax on bar 20. So it's a good looking bear bar, but then bad follow through. So if you're selling bar 20, sell the close, stop above, you go for 1-to-1. You really want to see the momentum be sustained by the bears, and then you get bar 21, and then you get bar 22. And in general, whenever the market is fairly far below the EMA, and you get a bar closing against you, so in this case bar 22, a bull bar closing against you, usually better to just get out and reassess, especially if you're selling bar 20 with the premise of momentum. Bar 21 is enough reason to get out, but if you're still short, I think 22 is a reasonable place to exit. So always in bears, probably exit above 22 and reassess. Aggressive bulls can buy, although it's not yet high probability. And I want to mention one more thing about this kind of situation. Give me just one moment. I spent some time earlier today going through some examples of when the market gets far from the moving average and you get just an opposite bar. So in this case, and this isn't even a great example, I'll pull up better examples of what I'm talking about. A better example was actually right here into the close of yesterday. Strong rally, the first reversal down should fail. And even if we pretend it wasn't the end of the day, when you get a bar like 79, it's usually better to just get out below it, even though the rally is strong and there should be a second leg up. When you get a strong bar closing against you, it can easily have a deep pullback, maybe to the moving average, or even reverse on you. And I have a couple of examples of that. And I have on my other screen, I have a few PowerPoint slides on this, so I can just quickly pull up the examples. So in this case, maybe 1, 2, 3 pushes up. It's a 4 or 5 bar bull micro channel, but the bars are getting bigger. Up here, it's climactic, unsustainable, far above the EMA. When you get a bar closing against you, it might be better to just get out below it, and you can get a deep pullback and then reassess. I'll show a couple of other examples. Here, another good one. 1, pullback, 2, pullback, 3. So even though we have a 4 or 5 bar bull micro channel with decent bull bars, and we're getting micro gaps, when you're so far above the EMA and it's 3 pushes up and you get a bar closing against you, even though bar 32 isn't the strongest bar in the world, and even though you probably need a double top to reverse this bull trend, usually when you're this far above the average price and you get a bar closing against you, it's better to just exit. And this is one of Al's default exits. You have a buy the close rally and you're far above the EMA and you get a bear bar closing near its low. You just get out below it, and this is what can happen. And I'll just show one more example, maybe 2 more. A little bit of a different context here, but even still. 4 bar bear micro channel, but a big bar, bad follow through, another big bar, you can see 3 pushes down, low in a trading range. You get a bull bar closing near its high, even though it's an inside bar and this should get a second leg down. It might not be worth holding for that second leg and the second reversal because the market could do this. And let's look at one more. Another example, so consecutive sell climaxes, 5 or 6 bar micro channel with some good looking bear bars in there, but look to the left, might be at the bottom of a trading range. Big up, big down, sell climaxes, and you get a bull bar closing on its high. This probably will not lead to a major reversal. However, you need less reasons to get out of a trade than to initiate one. So if you're short, probably best to get out above 38. It's aggressive to buy, but it's reasonable to get out of shorts. And you can see what happened on this day. So with that said, that's kind of the point I'm making with bar 22 today. You're far below the EMA. You're getting consecutive sell climaxes with a lot of trading range. Price action to the left. So even though this should get a second leg down, might not be worth holding when you get a bar closing above its midpoint here, like 22. And we started getting an endless pullback and a bull breakout and follow through, crossing the EMA. This is a leg 1 breakout for the bulls, and it's very likely that the bulls get a second leg, even if there's a deep pullback first. And there might be a deep pullback because of this trading range price action. But the upside is also probably limited for the bulls because of what we had earlier in the day. Lots of trapped traders above. If you think about the market cycle, spike and channel. So here's a spike all the way down to bar 5. We finally pulled back on 6 and 7. And that's where the channel phase begins. And then the market channels for a couple more legs, maybe 3 more legs down. And if we think through the market cycle, we know that channels evolve into trading ranges. So even another good point here on bar 22, what's the probability that we go all the way down here before we go back up here? Well, if we think through the market cycle and we see all of this trading range price action to the left, lots of trading being done up here, consecutive sell climaxes, spike in channel trend, channels evolve into trading ranges. We're expecting the market to retest the high of bar 7, or at least the stop order, the high of bar 6, where bulls got trapped here. And it's more likely that channels evolve into trading ranges. This looks like a couple of legs down in what will evolve into a trading range. And if that's the case, then you expect this to be followed by a couple of bull legs in a trading range. And you can see very quickly that's what we had here. There's one leg. Here's a pullback, maybe the second leg, 33, although that doesn't look very symmetrical. Maybe it's a variation of a spike in channel bull trend. Maybe we have to retest down here, maybe the low of 31, but probably buyers below, buyers at the 50% of the rally. Let's just put a line here. And this should still get a second leg, even if we get a deep pullback as we did here. Deep pullback might be starting a second leg, but lots of bear bars. We might need a second leg down. So lots of bear bars, trend line break, retest, and you can see a couple of things. Bar 40 is a bad stop order signal bar for the bulls. Anyone who sold above got trapped, even though it was a 4-bar bear micro channel with a bad stop order signal bar. The odds are if you sell here, scale in higher, you can avoid a loss. And what are you going to do on a retest of the high of bar 40? You're probably going to buy. You can see we're bouncing there. In this case, we fell below it and maybe a couple of legs down. And we got a very deep pullback, but eventually this bull leg, after getting maybe 3 legs against it, eventually got that second leg. You can see where we started to go sideways at the start of the channel. So spike, channel, and then overall evolves into a trading range. And that's where the market had trouble breaking above later in the day. And what about here? Shouldn't this get a second leg? The reality is it might be a late leg high in a trading range. So again, if we think through the market cycle, we might be high in the range and it might be a late leg. So maybe 1, 2, 3. It does not matter that the pullback after leg 1 here went below leg 1 and then leg 2 rallied above 1. You really just have to connect the dots between 3 pushes up. So here's 1, 2, and 3. So the market testing what could be the top of a trading range and the top of a bull channel. So a couple of reasons to expect resistance here. So even though the market's rallying, it looks fairly strong, it really could just be a buy vacuum testing resistance. And you can see here, 54 spike and follow through 55. But then these bars, it's implied that there were pullbacks in here because technically we did not have a pullback until bar 59. But this is a spike in channel bull trend. We'll probably come back and test down here. And you can see that's where we bounced on bar 70. For stop orders today, probably sell below bar 1. Not ideal to sell below bar 2 or bar 3 with such big tails. These are basically trading range bars, and you're selling low in the trading range. Better to sell the close if you're looking to sell. 4, you could sell below. It's a trend bar, and you're in the spike phase. But then through here, stop order is not ideal. Maybe you sell 16. It's a low 2. we rallied, pulled back, rallied a second time, and then got a bear bar closing near its low. But if you're selling here, it might be more of a scalp, although if you put a stop above 16 or 15, you might be able to get 2 times your initial risk. You're expecting a test of the bar 13 low, but you know that if this is a spike in channel and we're in the channel phase of a trend, that there are bears willing to take profits at swing lows. So we fall below 13 and traders take profits. There's a stop order buy above 22, or let me back up. 19, also a reasonable sell. You can call it a low 3. You can call it a triangle. So bear trend, here's a flag. Tight trading range, possible final flag. We get the bear breakout, bad follow through, and then a bull bar closing on its high. So traders can buy above 22, although it's low probability. Maybe you get 24 and wait for follow through. You're buying right at the moving average, but then you get follow through the EMA. So 25, maybe you buy the close, but you're buying at the top of a trading range. It's really not ideal. You also haven't had a significant trend line break of this bear trend, and this could be the first trend line break, the first minor reversal that is strong enough to set up a major trend reversal. So maybe there's your bear trend line. You get the trend line break, you get the retest over here. This is enough bars for a major trend reversal, possible higher low major trend reversal, 49. But backing up, we have this rally, should get a second leg. We got a minimum second leg, 33, rallied above 27. Second reversal below 33, but never triggered. Very tight trading range through here. Not ideal for stop orders. But the expectation at this point, strong enough minor reversal that there should be buyers below on a retest. So up here, you're still expecting the retest because how did major trend reversals work? You get a bear trend, trend line break, retest, and then you look for the major trend reversal. So up here, you're still not expecting this to be a major reversal. You're expecting this to be minor. There should be a deep pullback, and only then you can look to buy. So up here, traders are looking to sell for that retest. But for stop orders, really not ideal. Even over here, for the major reversal, you could try to buy above 49, but you don't get triggered until 51. You could also buy above 51 or 53. 54, you can buy. The market is rallying, but you have to be cautious because of what I said earlier about the market cycle. So we could easily stop rallying right when we get to this line. You can see pretty good bull bars here, but then they're suddenly getting smaller and smaller, and then a big tail above this bar, and then lots of overlap. So where do we go tomorrow? This is the Globex chart. So we have an outside bar today. And I mentioned earlier, there's been sort of expanding triangle price action. The market's in breakout mode, but every time it goes above a bar, there's sellers, and every time it goes below a bar, there's buyers. Pretty big bear trend bar on the daily chart, but look at the day. The market spent the majority of the day going sideways. So even though it's a trend bar, I'm expecting there to be disappointment for the bears tomorrow. Maybe, let me just back up here. Maybe what we have is a big leg down, maybe even down to here. And I can actually make it easier to explain this maybe on the 15-minute. Here's a big leg down, maybe leg 1, pull back, leg 2, and then maybe we get a second leg down and test below today's low. But even if we go below today's low, there's probably buyers below. Tight bull channel, buyers at the moving average. Again, fairly big bar, but not very strong. especially when you know what happened during the day today. And sure, we had an initial sell-off, but it's really just consecutive sell climaxes. And sell climaxes means the bears are not as in control as they could be. And sell climaxes could be due to bulls stepping aside and looking to buy lower. So sell climaxes are really common in trading ranges. And you look at this chart overall, you ask yourself, is this a strong bear trend or strong bull trend? And of course, you know the market is in neither. It's overall in a trading range. So while we might get another leg down, there's probably buyers below and probably disappointed bears tomorrow. All right. Thanks everybody for watching. I hope everyone has a good night.